Hi, this is Craig with Craig Trader of the Craig Trader channel and CRAIGTRADER.com. Thanks for tuning in. I'm coming to you to basically give you my midweek stock market report, investment report, what's going on in the economy, what's going on with the portfolio, kind of keep you in tune of what's going on basically. I want to thank you all for subscribing, for liking the videos, for commenting. Thank you for being faithful and pushing me and the channel and toward 5,000 subscribers. So please hit a thumbs up today, like, subscribe to the video. Also, please let your friends and family and the network know about it and the other productions that I'm getting done on here. I like to always check in personally. I'm going to be doing this at least once a week, maybe twice a week, as well as producing the other videos. And by the way, let me know how those videos are coming along. Those informational videos that I produce, let me know about those. If you like them, if they're informative, if they're helpful. I try to always produce something that I believe is going to help you in your wealth building journey, our journey together as we increase our wealth together, as we increase our investment knowledge together. So it's very important to me to know what you think and how you feel, that we interact with one another. So please leave comments. They're very welcome, of course, and let's have some feedback and some dialogue among one another. So basically, the market has been doing pretty well, as you may know, those of you that stay consistently in tune with the market. If you're new here for the first time, please stay tuned, see how you like it, check in with us, like and subscribe. Also, let others know about it. So, because it's about wealth building here. I'm trying to make this a channel where it's a holistic channel about financial literacy, about wealth building, but not only just wealth building through investing, but how to invest in a way that will increase your wealth faster, quicker than the conventional means. So basically, the stock market, if you just put your money in the S&P 500 fund or ETF, you're going to get an average return of about 10% a year, and that's based on whether the market is up or down one year or another, booms, crashes, bounce backs, things like that. Well, here I try to give investments and show investments that I'm doing, and I'm not giving you financial advice. I want you to do your own due diligence for these things and then make your own decisions. But I can take you on a journey of what I'm doing and how I'm going about it and tweaking my system to basically my goal is to return about at least 50% a year on investments. So, in other words, doubling our wealth at least every 2 years minimum. Because, and I do that through different vehicles. I have some high yielding dividend paying funds, which, if you look at some of my past videos, and I keep sharing these, I have high yield dividend funds that may, of course, um, look like they're losing a little bit of money on the when it goes down when they pay out the dividend, but the dividends are so huge through these yield max funds that a lot of times that when I'm going into them, they're producing 70, 80, 100% a year on the fund. And if it's even dropping down a little bit, then you still have that incremental increase usually of that fund over the year. So you're coming out ahead as well as getting the high yield dividends payouts every month. And we'll go more into that. Also, I do have some other investments that I pick out. I think I'm a pretty good stock picker, and also here I'll be teaching you how to do that too, as well as those of you that may not know how to do it. But some of my best investments, or the investments I like the most right now, some of the stocks are Robinhood, which is stock ticker symbol HOOD. Nvidia, of course, still is my favorite. And Nvidia, the Nvidia stock is NVDA. That stock, I've made more money off of that stock than any stock I've ever owned in my life. And I've been investing as a novice, as an amateur, Um, and then later on in life, of course, more professionally, and getting better at it every day. But I've been doing investments for over 40 years, basically. I know I don't look that, but I've been in the stock market and I've won, I've lost big, I've won big, but through time and through trial and error, through learning, through not giving up, then now I'm in a greater, much greater state financially. And also, I want you all that are taking this journey not to give up. You can end up in a greater state financially also. It just takes time, it takes persistence, and it takes the willingness to sacrifice and learn a little bit more. Now, for those of you that are just passive investors, that's fine. Stay on the journey with us. Continue to look at what we're investing in. Find some of your own investments. The key is get excited about investments. Get excited about the stock market. And I do have a book out, which I'll put in the link. I have my first book out called Get Rich by Investing. And it's on Amazon Kindle under Craig W. Smith. I'll have a link in the description and in the comment section. This book it also helps you to explore the various types of investments, but gives you some of the fundamental um, tools about investing, knowledge of investing, psychology of investing, somewhat. And so, investing is a key piece in anything that we do. I thought about it a few days ago, and I come to the conclusion that no wealth was built without investing. All wealth on this planet was built through someone's investments, whether it was investment in time, investment in them going to work, investment in them sacrificing, putting it in a 401k or a retirement plan, or starting a business and investing their time and hard earned their hard labor to get involved in that in business. And those of us that are business people, and those of you that may have had a business or work 1099 jobs, or side hustles or whatever we want to call them these days. But basically, you have to produce your own money. So a lot of time, as a self-employed person, you're going to put more time and more effort into something, and you may not see an immediate return out of it for a while. So you're steadily investing and you're steadily investing and steadily working at something more hours many times than someone who's earning a steady wage on a 9 to 5 job, and that just comes with part of the sacrifice. But the reward is you have the potential of making much more money and having freedom to do other things that a person who may be on a job, regular job, may not be able to do. Nothing wrong with either one of them. You have to do what is best for you in your life and what you feel your calling is, and what makes you happy and what pays your bills. But uh, I have to say there's nothing wrong with either one. If a person works a job, most people who work jobs that invest their money come out way wealthier than if they don't invest. Those of you that are on jobs, take advantage of those 401k plans, those retirement plans, but also open your own brokerage accounts. And I do have links for that in the description, as well as on my CRAIGTRADER.com website. Open up some brokerage accounts, and we both can get some free stock by you doing it through Stash, through Robinhood, through various other Moo. There's various different platforms out here. Some of you all may have Charles Schwab. I have several different brokerage accounts because I don't like to keep all my money in one or two things. I'm just that way. I'm kind of paranoid like that. And you never know what's going to happen with this economy, the government. I like to increase my odds of me succeeding as an investor by taking control of my own investments, my own destiny, my own life. And I'm sure that many of you want to do the same. So yeah, I would open up at least three brokerage accounts, and they can serve different purposes. You may have one that's for your steady investments, one for your options trading. Um, Maybe then you have another account for your retirement accounts. You may have one for custodial for your children or grandchildren, things like that. So I have set up some accounts even for my grandchildren, um, trying to get them interested in investing also. It's tough getting some of your relatives, your loved ones to come along on the investment journey, but don't get discouraged. You keep on being that light and being that lead when it comes to investing, and continue to learn and grow for yourself. So I wanted to kind of just give an overview of the investments. I am going to report on the cryptocurrency later on in another video, but just to give you an overview of various investments other than the stock market. So one I gave you Robinhood, HOD, Nvidia, NVDA. They're up about 5% this past week, 20% over the past month. Robinhood is up, the stock is up 2% this past week, about 17% over the last month. So you're talking about 17%, 20% respectively over the last 30 days. If you were to annualize that, that's like tripling your investment over the next year if it keeps up that pace. So that beats giving your money or letting your money sit in some savings account or CD where you're making next to nothing, 1, 2, 3, 4, 5%. That's nothing compared to the investments you make. And you me and say, well, the stock market is risky. There's risk to everything, but you have to remember you have to have some risk to have way more reward. And the risk taken in the stock market can be very minimalized by diversification. So that's why I always put my money in several different stocks, several different ETFs or exchange traded funds. When I do my options, I don't just put all this money in one option play. I may do 5 or 6 different option plays. I may put 500 in one, 300 in another, 1,000 in another play. And if they don't all work out, which most of the time they may not, or you may have to wait until it comes around and does work out, or you may have to sell out at a loss. The name of the game is if you're putting 5 deals out there, if at least 3 of them come back positive with a good profit, then you're still profiting. You're still increasing your portfolio. Another stock that I really like is Palantir, PLTR. Palantir is an excellent stock, excellent company. This past week it pulled back some because it had been on a run. It's down negative 2.5% for the week, but it's up 15% also for the past month. So these are excellent returns. Those of you that also want to diversify, I keep about 20% of my portfolio right now in cryptocurrency or crypto related companies. And as I said, I'll get into the cryptocurrency part in another video and maybe just do a video just on the cryptocurrency investments that I'm into. And those of you that want to explore into the cryptocurrency and some of the things that I'm investing in. Also, precious metals, since we're really in an inflationary and a recessionary period right now. I know the pundits and the talking heads are saying we're not in a recession, we're in an excellent economy. We are not. Trust me, we are not. They're going to tell you what they believe you should hear so that you won't panic, so that you won't stop investing, so that you won't start hoarding your money or whatever you're going to do in a panic. But there's no reason to panic if you plan well. If you gain knowledge and plan, no reason to panic. You already know what's coming down the pike. You already know what the prices are like in the grocery stores. You know what the prices are like at the gas station. You know what the prices are like when it comes to clothing, entertainment, restaurant prices are sky high now. The food prices at restaurants is ridiculous. So that tells you we're in a high inflationary period at this time. The economy is not doing real great. And so you have to hedge yourself into things, not to stop investing, but invest in things that will has the potential to increase even if the economy is not doing well, such as precious metals, gold, silver, physical silver, um, gold ETFs, silver ETFs. One of the main ones that I like is GLD, which is a gold ETF. based on the price of gold, and it moves with the price of gold. So gold is at an all-time high now, which tells you something, because usually the smart money will run into gold because they already know what's happening with the economy. We may not see it, but when you see gold prices beginning to go up and spike, that's usually an indication that what they call the smart money, or the institutional investors, the wealthy investors, the knowledgeable investors, know that the economy is not as good, and they don't want their money all in just stocks in case there is a great pullback, or a crash, or whatever we want to call it. And so they'll put their money in precious metals to help hedge against that pullback, or that fall of the stock market. So gold has increased. Price of gold has increased 3% over the last week, and about 4.66% over the last month. An excellent investment return. So 4.66% in a month, and you may say, well, that's not as good as the other. But you remember, now you're diversifying, so you don't have so much overweight in one particular area or another, so that your money won't be at risk. You won't be at risk at losing your money, or losing all of your money, if you can diversify in the right form and fashion. So that 4.66%, without having it in the stock market, or in a CD, or a high yield savings account, I mean, basically you've made your money in 1 month of what these institutions are going to pay you to have your money in there for a whole year. So that's ridiculous. And it's always been a hedge against inflation, against all kinds of calamity and collapse and things of that nature. Silver, which I use the ticker symbol SLV, that has returned 3% over the last week, and 4% over the last month. So a little bit about running about even with gold. But I like silver also, because silver, not only is it an industrial metal, it's used also in jewelry, but it's an industrial and commercial metal. It's used in those usages, but it's also priced lower, so that if people want to buy physical silver, it's easier and much cheaper to buy it than physical gold. And I do recommend, to me, to always have physical silver or gold, or both, if you can afford it, in your house, or in your lockbox, or safe, or wherever you want to store it. And that's in case of something that would be like a bank collapse, or some run on the economy, things of that nature. The dollar devalues to the point where the money's pretty much worthless, and you don't want all your money locked up in a bank somewhere. I keep a minimal amount of money in the bank. I don't trust the banking institutions, or the Federal Reserve institution, or the government institutions when it comes to my money, because they can deem things an emergency and lock the banks up. The banks could be in a collapsing mode, and the government is, believe me, they're not going to tell you that the banks are collapsing. It's just going to be hard to get your money out, as much money as you want to, when you want to get it. The ATM, they may say the ATM machines are kind of down right now, things of that nature. You don't want to put yourself in that position. Have yourself well protected, be informed. And that's one of the things I like to do on our channel here, is to inform people whichever way I can, that will help you to protect yourself and to grow your investments, as I said. Also, the YieldMax ETFs, that website, if you go to their yieldmaxetfs.com, that is many of the high yield investments that I do, and through the Yield Max funds. They pay monthly, but now, instead of all of them paying at the same time each month, they have come up with a system where they announce which Yield Max funds are paying in a particular week. So they section the funds off into 4 different groups, and each one pays each week. So you can get paid weekly, actually, by diversifying in these different funds, or just going with YMAX or YMAG. YMAG, YMAX, and those pay basically the payout on this last one, and these pay weekly, has been 62% yield on your money. YMAX has been about 50% yield on whatever your investment is. So you got to think, even if you have, say you have 10,000, we'll make it easy, $12,000, and that you want to invest in high yield funds. So out of that $12,000, if you're making 50% yield per year on that, then you're making $6,000 a year, roughly 500 and something per month. Since they pay monthly or weekly, you can kind of get the gist of it. Some of you may not have that. Well, get started with whatever you have. Build that money up. Even if you have $100, start building it up by investing in some of these things, trading, and the different tools. And then as you build the money up, also go into the high yield dividend paying ones. And you don't have to keep it in there. I mean, I trade some money up by doing what's called a dividend capture, which I'll get into on a video more in depth on that. And that is, you can buy into the fund before the ex dividend date, once it's declared, once it's announced. And then you may get paid out on it 2 days later. As long as you've held it into that ex dividend date, you can sell out of that and go into another investment with that lump of money, or trade it, or do whatever you want until the next declaration date comes up for a high yield fund. And then you can pull this and actually multiply your dividends that way also. And it's legal, it's allowed. So these are like different tools that you can use and that I use to multiply my money in the investment world. So the ones that I high yield that I'm into now, it's too late to get into them, of course, for this week. Next week I'll try to do the video to announce what's coming up. But for this particular week, I went into Coney, CONY, because it's at this yield. They announced that the yield is 101% yearly or annual yield. ULTY, which is a yield max fund, at 100% return. So that same $12,000, if you conceivably, and if things stay equal, you invest that, you're actually making $1,000 per month off that $12,000. You're doubling your money effectively. But the difference is you're not just doubling it in value, it's actually throwing income off to you each month. So whereas you may see the increase, or even not see the increase in the investment, this is income that's being generated for you every month to continue to invest in other things if you like, to pay your bills. You may be doing it to say, well, hey, I don't want to touch the principal so much. Um, and of course, you can safeguard that by putting stops on it. But and there's so many of these different investments you can go in and out of, that pretty much it's pretty safe investment to get such a high yield of income every month. So I average about 5,000 a month off of my investment income, and that's besides what I do with trading, besides what I do with the dividend capture also. So it's very doable. And I've been doing these since about September of last year. So we're looking at, we're looking at a year, and about a year and a month. So it's been very effective. I'm very pleased. I think you will be too, those of you that get into it. And if you're scared, you have to learn how to invest even if you're scared. Invest scared. Go ahead, try it. Do it. You don't have to put all your money in. You don't have to put it all in one thing. Remember, you control your investment decisions. You control your investment destiny. You can decide when to get in, when to get out, what to invest in, what not to invest in. You can trade in and out And when I say trade, and one of the reasons it's called Craig Trader, it's not just about trading in options. You don't have to be an option. You don't have to be just into options to be a trader. A trader may mean also that you buy in and out of stocks based on the value of the stock. I buy into stocks that I may not actually hold, like recently, Humana. Humana had a bad earnings report. The stock fell. I bought into Humana. I did an option trade on it too, but Humana's a good solid company. It missed on the earnings or some other information. I know these good solid stocks that have been around and that's not going anywhere, and it's in the medical field. It fell. The stock fell quite a bit, and I bought into it. And I held it a few days while the stock rise back up. And this wasn't one I want to hold forever, so I sold out of it. I'm mostly into technology stocks. Um, and semiconductor stocks. So these are examples. You can actually just buy into stocks, buy enough stocks, and then when they reach your potential, you can sell them, or you can sell half of them if they profit a certain amount, and or you can choose to hold them. I don't know what your income situation is. I don't know how your income comes in. I make all of my income, most of it basically off of my investments in trading. Of course, I'm trying to add other sources of income too, because I believe in that as well. But it depends on your situation. But what I'm saying is that by investing, you will increase your income, you will increase your chances of growing your wealth at a faster pace and at a greater pace over time. It's a snowball effect, just like they say paying off debts. Well, I believe in paying off your debts, but I believe in investing too. So I would never, me personally, I would never pay off all my debts at the expense of not having cash or not having money to invest, because your money, when you invest it, is working for you. If you pay off all your debts, that's great if you can afford to do it. But if it's a choice between investing this money or paying off all my debts, and I don't have all of that excess money to pay off these debts, or it doesn't make sense to pay them off all at once, because you got to remember that money you're putting toward these bills is money that could actually be working for you to grow your wealth faster over time. So you may be taking your investment money, so you're robbing your future wealth many times to pay off something faster. And I'm not arguing against it. I'm just saying, think about it. What will work for you? You're paying off someone else's bill. You're making the creditor happy. You're making them money. But could you have used that same lump sum of money to put somewhere else, like these high yield investments or something that's a stock that's going up 2, 3% a month and creating 30, 40, 50% return in a year for you, or paying off something with it, and that money is not creating money anymore. Now, if you have sources of money coming in and you're just going to pay that off, and then you have all this additional money and you can invest that, that's fine. But I believe in doing both. I may not pay everything off all at once. I may take, if I have the lump sum of money, why pay all of this off? Just keep paying the payment, maybe it's a little bit more to pay it down faster, and put that other money fully, mostly into investments to supercharge your income and supercharge your wealth. So these are the things that I like to share with you, let you know what I'm doing on a journey, and that can help you kind of give you a trigger to think about how to increase your wealth and what to do with it, how to manage your destiny with it. So thanks for tuning in. Look, hit the like button, leave a comment, subscribe, share the video with your friends, family, and loved ones, and just you can't win the game unless you're in the game. So get in the game, play to win. Look, stay prosperous, stay blessed, stay focused, and I'll be tuning in real soon with you again.